Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
So welcome guys, welcome back to the channel. Welcome to the Greedy Trader channel. For those of you who are new, this is the channel where we talk about all things market profile. So like I always say, there's a lot of stuff out there, but we know that 95% of institutions use market profile in their trading. So from my standpoint, it's essential that everyone who's a trader learns at least something about market profile. But guess what, guys? Over here, as my philosophy goes, trading is a business and you need to structure your business in the best way so that you can succeed. And that's what we show traders how to do here on the channel, and some of the other stuff that I run around the channel, and all the other stuff I run around my own trading. I try and be as transparent as possible within the bounds that is acceptable to me. So as you go through my videos, if you look at my past videos, you see everything that I've spoken about, everything that I've kind of alluded to. Some of them have taken place, some of them have been off, and that's all okay. It's all part of the business. But I'm hoping that all you guys who find yourself here are going to learn something. For me, the idea is to always make trading real, because it's real money, it's real stuff at play, and if you're trying to do this for a living or be a professional trader, then you need to take it seriously. And some of that involves having to invest some time, some effort, and some money into your craft so that you could end up in the assumed 1%, or the assumed, I should say, 1% of people who succeed in trading. You know, of course, you know, numbers, statistics, you can pull them out of the air. It's more than likely more than 1% succeed. But again, not everyone is out there, you know, talking about their success in trading. You know, again, trading is a business. Businesses have verticals, and you want to bear that in mind. So even if you are an amazing trader, then you should have a business vertical around your trading that allows you to monetize or diversify your income. That's the whole point of trading. So one of the things that we do here particularly, and don't worry guys, I am going to come to the video where we talk about some of the moves, what we're looking at, what's come to pass, P&Ls on screens, etc., so that we can get a very good benchmark of what we can be expecting for the future. But however, back to my point, I focus a lot on making trading real, in the sense that, for one, I sell option premium. I've released a major course on how to do that, where you can make consistent weekly income without having to push yourself over the edge, right? So I show people how to sell option premium. I also show people how to trade options. Even if you want to do option spreads, or you want it to have a directional bias, I always say to traders that if you, and I'm not talking about the Robinhood stuff, it's great, right? You know, you can trade options on an app on your phone, but I'm talking about the real deal here, understanding an option chain, for example, also understanding the Greeks. So basically I teach you everything you need to know about options. So from there, you can now create another vertical in your trading business, which is selling option premium, and that will give you revenue, right? And obviously there is always a cost of doing business, and that's the margin you need to allocate in order to write those option premiums, and all of this stuff we discuss in the course. However, it's just one vertical of your business, and then you got leverage trading. Obviously, leverage trading, it carries a little bit more risk if you don't think about how you use that leverage wisely. Currencies have very low volatility, say for example relative to stocks, so having more leverage and buying power is essential. So we can understand why most traders would feel like they need a lot of leverage, a lot of buying power if they're going to make it work. But really, the equation you should be focused on is high probability trades, consistency, right? And if you can achieve that, which we can achieve because we use market profile, and you will see that here on this channel, it's because we are aware that it's a game of probability. A market profile defines the probability of you getting a successful trade and you not getting a successful trade, and you'll see that through the channel. Anyway guys, for those of you who have been with me for a longer period of time, this channel's been running for since 2014, then you probably already know. You know what the deal is, right? So once again, it's just another video, right? So anyway, moving on. So let's talk about the charts. So starting with Aussie dollar, right? What did we say last week? Or I shouldn't even say last week, the last video. We spoke about this. And like always, gaps in value, inefficiencies, offer stacks, markets dropping, lower lows, right? This is a weekly profile, guys. So we're seeing these lower lows. And then we get inefficiency here again, gap in value. So expect a strong downside move at some point. So essentially a stronger dollar. We need to fill this gap. And these are some of the nuances that you pick up, right, as you trade market profile. So bid stacks, we're going higher, right? Fill the gap, great stuff. But one of the things that we would notice in this trade, we can see that change of character there, right? So we go down, 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 break to the upside, and then we start to take out the recent highs, right? That's a great long opportunity, right? We're not talking about risk management here. We're just talking about the idea that that is a good long opportunity. And that's what we called out, said that, look, this is what we want to see, right? We see that, we're going to get a bullish run, and you should be at the back of that trade, right? Now I've got other videos where I've showed you how you can manage your portfolio effectively. So diversifying your holdings so that you're not getting exposed to just one asset class consistently. And so again, you can balance out those trades by looking for opportunities across asset classes. That's one way to do it, right? You don't get this explosive income growth, but you get steadier growth, right? And a lot of traders do want that. However, if you focus on one asset class specifically, it will make you a specialist, but you're going to have more or less maximum exposure to that asset class. Crude oil, again, we had a bullish bias on this one, and I did say in my last video that that's changing. I think I've been saying that now for 2 videos, that I'm actually a little bit suspect about crude. We have a competitive buyer here. That was great, but as you can see, we've really struggled. Market's really seen volatility go out of crude. So again, I was structurally bullish. I'm sort of changing that. So crude is one that I've stayed away from, and haven't really done anything in that. The S&P 500, I was structurally bullish on this. We've been talking about this for weeks. Now we've reached some kind of a local top, in my opinion, and we're probably going to track back. We've got a nice little bid stack here. So this is what we're really looking at for any liquidations. So the supports are still down here in the 4229 regions. So I'll pay attention to that. Again, we need to see a real change in character. We see some responsive sellers here. Whether this is going to hold, we're now almost to the end of the week. We don't know. So we'll really have to see what happens next week. At the moment, as you can see, there's no avenue here for a trade. Once again, you can see that with gold, we've been talking about this for a while, is that we had a lot of value rejection. Now we're breaking lower. We can see initiating seller here, a bit of offer stacking, and now we're breaking lower. So we can expect some more downside. I think we're going to track through value a little bit. So I'd really watch that 1900 a ounce coming into next week. We often talk about range when we deal with market profiles. So again, if we don't retrace the week back into value, which will signify another rejection, then we're likely to keep breaking lower, and then 1900 an ounce becomes that place. And what did I say in my last video? Gap in value, guys. You got to be paying attention for these, and you can only see them if you have a market profile tool. You can't see them anywhere else. Cable, this was a good trade that we did. P&L on the screen. One of the reasons behind this, there are two facets to this. One is we had a lot of extended value up into the highs. This eventually got played out as an intraday trade, which we'll talk about later on. But again, just having that ability to see what's going on the longer term macro as well as the intra-week, intraday perspective is kind of handy. But again, we're trading up a value low, recent week's high. What do we talk about? Liquidity concepts. We tend to find a lot of liquidity up here, and that almost leads to a jolt back. We've been extending for a while in cable. I'm structurally bullish on cable, mind you. I think we're going to get a really big upside over the course of the year. But again, not without those swings to the downside. We've got bid stacked here. So likely we're going to have to first challenge this value. It's quite an efficient market. We did have a gap in value last a couple of weeks ago, and that's already been filled. And that was one of the things, once we saw bid stacking here, we were talking to guys about that this is the low. There's a lot of liquidity down at this low. We can see that hunt there. Again, talking about concepts, guys. One of the things that we tie together a lot with our videos and the way we trade is concepts, like the different concepts that you have to observe about the ways market mechanics, right? So we understand things like if there are a lot of stops here, that's a good place for liquidity, and it tends to be at significant low points where we can see a lot of volume churn. For example, we tend to get a lot of that movement. In fact, one of the positions that we were looking at in the Discord server, and guys, I will leave the links below. I have an amazing free Discord server that you guys can check out and really get familiar with how I do things. But anyway, put a post up on the Discord server about a trade we were looking at in the Aussie dollar, and that's a really classic example there of how a trade goes, hits some liquidity, and then reverses back to the upside, right? So these are all things that we want to bear in mind when we're trading, so we have to have them at the back of our mind almost consistently. So trading is never a one size fits all type rule. Okay, so again, that's cable. Dollar yen, structurally bullish on this one. Been talking about that for a few weeks. Now we're breaking to the upside as expected, but remember, we have a gap in value to the downside, so it's signaling that in the near future we're going to see a stronger dollar. Again, we've been talking about dollar CAD. I'm structurally bearish on this one. You can see a stacking. However, this has been a strong support level. We've been just really struggling. So what are we waiting for now? We're closing off the week. We get a change of character, break to the upside. What can we see? Gap in value, right? So we know that we're going to get a stronger dollar coming in against the Canadian. So there's a lot of warning signs, right? And this is what professional traders know and understand, that most other traders, even if they're really good at what they do, they just can't catch. So they're going to be wrong on these kind of moves, whilst professional traders are going to be wrong on other kind of plays, right? Because it's all about information asymmetry at the end of the day. So no, everyone's not going to know everything, right? And now, of course, the information war gap has been kind of narrowed. I mean, information's all over the place. It's all instantaneous, right? So no one has an edge, right? No one has an information edge. I repeat, there is no one, professional or otherwise, that has an information edge. Not in the world that we live in, where, you know, there are AIs and APIs and everything running through everything. Information is instantaneous. I mean, people have, you know, influential family members, for example, that can give them insider tips, right? So information, there's not the kind of information asymmetry. So now a lot of it is in risk management and the data, right? What you can see statistically on the data gives you an idea. So again, we can tell this is a weekly low. I'm just paying attention to this one just in case we get a break to the downside. But really and truly, if we get a change in character, then we're looking at a market inefficiency fill. We already knew that this was the offer stack. We've been talking about that for a couple of weeks. Great selling opportunities. Even at one point, we were selling these moves and making some money. Bitcoin, as I said to you guys last week, I was always dubious about this one. More downside. We're now trading a bid stack. In my opinion, if you're in a dollar cost average, well, it's a great buy. I personally don't like trading Bitcoin as a leverage trade just because there's a lot of risk and volatility to it. It's not as measured as some of the other asset classes. You can see the development here, responsive buyer initially. We can see that intervening seller at the value high, stacking, offer stacking, break below the offer stack, back into bids, right? We could see that activity, right? You can actually visualize it. Now we've got strong offer stack here, more selling, right? Obviously, this is reflected with on-chain data. So if you have access to on-chain data, you'll see that there's been a lot of money that being moved around, and this is incredibly important. It's an important point to note. So Again, if you're DCAing, goodbye for me at this level. This would be a really good pickup, at least for a rebound, but you have to bear in mind they're these offer stacks. So realistically, I think we need to see lower prices on Bitcoin, in my opinion. But I think we've more or less hit a short-term low, in my opinion, and I think that we're going to reverse very shortly, if not this week, next week most likely. Sterling yen, what did I say? My last video, check it out. I did say that I'm super bullish on sterling yen. In fact, I expected sterling yen to do the biggest move of any asset class this year in currencies, right? Sterling yen was that pair. A lot of reasons for that, fundamentally as well as statistically on the chart, and it comes back to my point about developing structure. I'm going to be releasing a major course program that will cover everything you need to set up your trading business for success, right? And that's going to involve understanding the technical side of it, who you want to use, how you need to be looking at the market, and especially understanding market profile. The Kiwi, again, I was a bit dubious on this one because we had a big sell-off. Structurally, it was a bit problematic. We did build up, but again, what did I say? Let's just see. We've got some nice bids here stacking, change of character through value. We always know that the midpoint is the target when we have a big elongated trend week, right? Or any kind of trend profile. We want to be mindful about the returns into it because there's minus development, right? So again, minus development is always a thing that we'll always see orders flooding in to push this south side, right? And we can see that already. We have a gap in value here, so I won't be surprised if we retreat on the Kiwi. So it was a really short-term play, which is why it just really did not float my boat. So, as I said, it just did not float my boat. So anyway, but here we are. We got a nice little offer stack here. We don't have any upside inefficiencies. So again, I would like to say sellers are currently in control till we can reasonably see otherwise. All right, so now let's pivot very quickly to some of the intraday stuff. So once again, if we just take a brief leap over here, whoops, see. Right, so if we take a brief leap into gold, so once again we can see similar thing here with the intraday on gold, but we're not going to talk about gold today, not on the intraday. One of the things I wanted to bring to you guys' attention was some of the moves that we've been seeing in dollar yen. So again, this is an intra-week play. So again, and again, I want you guys to really pay attention to this because these are some of the concepts we expect you to be able to tie together. So big upside move, what we call a P-shaped profile, really big build up, close to the upside, right? First problem here, what could cause this? If we drop our TPO chart panel, we can actually see that with this particular 4-hour bar, because this is a 4-hour profile, we can see that a lot of the trades were up here, right? We can tell by the TPO print, but what we also can see is the prints above and below the point of control. So we got 29 above 24, so this is relatively balanced, right? So even though we have what appears to be a elongated TPO print below the point of control, we can see that there was a lot of stacking on the upside. So there were clearly sellers invested. We can see E period, the market goes in, finds more sellers, and then closes lower. So we got initiating seller by the E print, offer stack, close lower. Right, so now we're paying very close attention to what happens with the more recent low, but we've got enough information here to say offer stack, close lower, this is resistance, right? Immediately, we can tell. So what's going on? Market starts to push lower. Now this resistance here, since we've seen the market break, we know it was a manipulation of the price lower, but there's profit in it, guys. It's so weird when we say, well, the prices were manipulated lower, or they were manipulated higher. Well, there was money in it. It depends on what your execution point was. So none of this matters. So in the end, you can see close lower, bit of a bid stack. We go up, hit the sellers again, close lower, below the bid stack. Lots of information there, guys. Lots of information. So now we have offers here, and buyers trapped, liquidations coming, right? Because these guys need to get out, right? There's a reason this profile became what we call a normal profile, right? Normal bell curve shape is because there were just too many people trying to get long. and then they got broken. We can tell because the market closed lower. A lot of data. And then we can see that attack. Sorry, we can see that attack at the bottom, like to save this, and then the big cascade, right? So we were now going through a value trade, right? So again, from the moment we were here and we're trading almost back to what would be a relative mean of this value, it tells you that we're going to see lower prices. Eventually we dump inefficiency as all the forced liquidation, and then what happens? A lot of bid stacking at what we will call a reasonable low, so, or an unfair low from a market profile perspective, right? So we're traded two values close to value low, bid stacking. What does that tell you? We just need to see some movement. We need confirmation. The moment we break, we engulf this value, it starts to be a long trade. If you want to wait for this one, break of the highs of the final profile will becomes a good entry. It's an inefficiency gap in value we're going to go through, and you can see that movement now, bump straight to the upside. Right now, of course, for some people the trade didn't need to be all the way up here. It could have been just to the highs. It could have been to value highs, back into offer stacks. You could be taking profits, protecting your trade, managing, and then you get this big break to the upside. And now what do we see? Gap in value, bid stack, gap in inefficiency going up. A lot of liquidation now, right? So basically all the sellers here, they're no longer standing. The ones who are late are getting crushed, whatever. What happens next? Get to the upside, stacking. What's coming? Character change. Bam, we're going lower. What does that mean? Potentially we could take out the stack here. So again, if you wanted to be short, then this is a great opportunity. Either under the offers, we're trading back in a bids. We've seen some responsive buying. We could pay attention to this again. If we start to take the upside, then we're going to get continuation. This is where our understanding of structure comes in, because we were talking about dollar yen on the weekly. We're structurally bullish on this asset class. If we close up here for the week, we're going to have a gap in value, and that's likely to be filled, and that will enhance the bear case on an intraday. So again, if you're short, you might have to be patient. You might have to adjust risk differently, just in case we get a liquidity hunt. You start to think a little bit more broader about how to manage your positions, right? Anyway, let's take a look at some of the plays that we did. The cable trade, similar idea. We had an overextension. We already spoke about that on the weekly profile. And then what did we start to see? Right, immediately we were going up, some response and P period bids here, inefficiency, good sell level, right? So you can start to sell here. Again, we closed up. We can see the offer stack at this point here, good short level, right? Like inefficiency, gaps in value. So again, massive sell off, right? Big trade. Lots of profit in here. You could be looking to get out value low, because this is we're structurally bullish on the pound anyway. Overextended market, bid stack in here, so you don't want to push your luck. So you can see that breakdown. We roll down, offers, and then what do we get here? Bid stacking. Now we're going up to clear the upside. We can see bids are stacked. So unless we can take out these buyers, we can expect this price to keep going higher, right? So we're probably back into value low, maybe retest the offer stack, or like we've seen before, these prices could have been manipulated lower, in which case we might end up with a major upside break. Again, similar story with crude oil, similar story with the S&P and so on. So guys, I hope you've enjoyed this video. I've kind of pulled it out a little bit. That was my intention. Hit the like button, subscribe. Love to get this channel growing. We think we're doing a good thing here in terms of making trading real, and you guys are a key part of supporting that. So subscribe, like the channel so we can grow it, tell the YouTube algorithm that something's going good here, because I tell you what guys, YouTube is not a fair space when it comes to showing you what you need to see, right? The videos you're going to see, you're going to be most interested in are the videos that are going to be the ones that are going to cost you the most money, right? Because those guys, they're famous for a reason, right? YouTube is just that kind of a space. The rest of us, we do it because we enjoy it, honestly. Like, there's literally no payoff. We do it because we enjoy it. But that's the point, right? YouTube is now in a place where it is only interested in promoting the people who make the most sensational content that will eventually get traders into trouble, right? For the rest of the traders who are trying out there to create their business vertical, really good traders and want to show you some great stuff, they're never going to get seen. They're never going to get heard of, right? It might be years. They might even give up. Most people just don't bother anymore. You know, this channel's been running since 2014. We only have a couple of thousand subscribers. We're a great channel. We've had some great content, but largely, I'm a trader first. So as a result, I haven't been consistent with YouTubing in the same way that some people have, especially in the realm of building my business vertical around it. So again, I'm a straight talker. It's all about honesty, right? So again, your support for the channel is great, because then at least it alerts the YouTube algorithm that, hey guys, there's something going on here, right? No matter how reluctant YouTube is to spread the content they're going to, right? So the viewers are a crucial part. So if you gain value from this video, then you want to hit subscribe. You want to be able to like some of the videos, hit your notification bell, whatever, right? So we can get the channel growing. Anyway, guys, to my next video, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?